Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this review we're going to talk about a number of breakouts we traded in the oil sector this week, which is the strongest sector of the year and the only one positive. Many other of the broader market indices are still in bear markets. This is our technical approach to trading anything that moves. We actually have a top-down analysis, but these are the concepts before we find a compelling setup. But our techno-fundamental approach, as we call it, is we're looking at technical analysis, intermarket analysis, and market internals, and then that gives us themes to base our compelling patterns on. No setup, no action, I tell people. Then we take that picture and see where it is in connection with the overall trend, support and resistance. Is it showing relative strength or weakness, retracement and volume concepts? And then here's some of the intermarket analysis and market internals that I was mentioning. So here is the OIH, Oil Services ETF. And notice, we use three moving averages. The blue is the 20, green is the 50, red is the 200. We use them just to help speed up the process. Notice how all three of these are pretty much sideways. We're in a multi-month wide consolidation, but we had an ugly sell-off here in late September, and we had a 100% retracement back to that. That's a concept suggesting strength. As long as it retraces less than 40% and gives us a compelling pattern, and we have a price void, which we do here, that is a beautiful long setup. So it rallied, it came in, wide range bar, red bar, inside bar, inside bar, inside bar, kind of a 1, 2, 3, a gap breakout. On this day, we gave this trade to the subscribers of the Master Trader ETF Investment Trader, which only trades ETFs based on longer time frames, where we're looking for compelling setups on the daily and weekly chart that have a price void. Price void means look to the left and there's insignificant resistance or congestion to allow a bigger move. I mean, we were swing trading and doing all kinds of things on a shorter time frame here, but with this pattern, it warranted a long setup for our longer term hold. We actually closed it into strength last week when it got vertical. Notice how many up bars it got, topping tail, red bar, far from the 20 period moving average. We just sold in the strength. This is a closing trade now, and all three of our advisory letters have open and closed spreadsheets where you see the strategy, the symbol, the date, the technical setup, and of course the management all the way from opening to closure. This is in the closed spreadsheet. So we bought the ETF at $257 right on this day. We sent a telegram alert to the subscribers. It's a beautiful gap breakout, and we sold it into thirds, into strength. The last lot there made over $40 in 8 days. 26% return on capital, $34 net gain. And our spreadsheet calculates an assumed max loss of $300 per trade. Then it calculates the position size for you. And there you have it. So that's the sector. We actually gave that as a trade, as mentioned in the ETF Investment Trader. And then in our other letters, the Weekly Options Trader and the Swing and Options Trader, where we give both stock and option trades, we, with our top-down analysis, knowing there was strength in that sector with a compelling pattern, we go to our TC2000 software scanning program, and we look at all the components of the OIH to see which have the best setup. And I'm going to show you a couple of them right here. Traded them all last week. So here again, same kind of theme, greater than 100% retracement, and just chopping around going sideways, building support over time as opposed to retracement and reversal and support. So consolidation, building support over time is actually stronger demand because buyers are stepping up and it's just going sideways, correcting. And so, these were uglier inside days. So we had no interest in this until we had this closing breakout. Look to the left, no resistance, strong sector. we bought over the high of this. You can see here at 147. Breakout, so on and so forth, made almost 10%, just going into simple trail mode there. MRO, symbol, Greg likes to say it's the same but different. And it is. It's a, breakdown failure, greater than 100% retracement, building support over time, red bars ignored, closing breakout, we bought over the high, 11% in 8 days going into trail mode. Bravo Papa here. This one, it's an ADR, so a little bit, it's gappier, but same but different. I got this big base of support, big rectangle consolidation with all these flat MAs, bullish engulfing bar here. Gap breakout, price void. I don't know what caused this gap up, but we just sold the gap up. We actually sold half pre-market and then half 30-minute low, almost 12% in 4 days. Another one here, same but different, 100% retracement, building support above the 50 MA, closing breakout, same, bought the stock. And in this one, we're showing a tad bit of relative weakness compared to the other one. So this one I said, just sell and just take your money on this one. One last example here, because it's an option trade. Recently, we had an MT live on this exact strategy of selling puts on so-called quality stocks. And the theme is when you sell a put, you're receiving money, goes into your brokerage account. One contract represents 100 shares, so let's say you sold 10 contracts of this 120 put. You are agreeing on or before expiration to buy the underlying stock, COP, at the agreed upon strike price of 120. So you're taking in $1.10 a share in exchange for that obligation that you're assuming. So we call this a win-win. 10 contracts of this is $1,100 hits your account. That's either full profit as long as it closes above the short strike 120 at expiration, which was only a couple days, or secondly, if you are assigned, then your cost basis is right here. The 120 short strike less premium received of 118.70. Penny for penny that it expires above that, you are making money. And we like doing this in what we call more of a mildly bullish setup, because it can just chop around, it can go sideways, it can even go against you a little bit, and we're making money through time decay and volatility contraction. When we're in this for speculation, and so we actually closed it out into 2 lots into profit, $150 on a 10 lot for a couple days. If you did hold it, notice that it expired over $7 above the short strike, so it would have been full profit of $1,100 if you held it to expiration. Hope that helped. Come check us out. My partner Greg Capper and I start in our live green trading room, 9 a.m. Eastern Time. He starts out with detailed market and sector review, market internals, yield analysis, levels in the SPX for 0 DTE, option sellers like me, and then we're interacting with our traders all day long, scanning, answering questions, and we say, come watch us apply our objective technical approach in real time. It's not just reviewing a pretty PowerPoint slide. We are implementing the method in real time to make money, to learn, educate, and profit. As always, email Greg or me with any questions. Good trading. Look forward to seeing you in the next trade review video.